This time I'm going to be going over the four different main types of businesses that you can have, the basic ones. That's going to be the sole proprietorship, the partnership, the LLC or limited liability company, and corporations. I had to write down a few details because there's a lot to know. The sole proprietorship is what most small businesses are, and the partnership as well. If you have somebody invested with you or a partner. The only time that two people, and only two people, can be considered a sole proprietorship is if they are married. Then you can file as a sole proprietorship because you're operating as one unit and you're married. So in the eyes of the government, you are one unit. So a sole proprietor, or the married couple as a sole proprietor, will own 100% of the business. This means that all of the equipment, the assets, the liabilities, the bills, everything is 100% the owner's responsibility. Even though you may have a company name and an EIN number, which identifies you to the government, it's essentially your business's social security number. You can think of it like that. So the owner takes care of all that stuff. The business itself cannot own property, it cannot own equipment, it cannot sue or be sued, but the owner can. It is not, the government doesn't legally recognize it as separate from the owner. They are one and the same in the eyes of the IRS and your local federal government. The partnership is two or more people who come together in an agreement. A contract is not necessary, but is often put into place just to prevent future issues. Partners invest either money, time, equipment, whatever they have in return for a portion of the profits at the end of the year or the end of the quarter, however they have it worked out. With a partnership, everything has to be managed jointly. Not one person can make large sweeping decisions for the company. Everybody has to get together, and that's where you start to get into the board members and a lot more meetings and things. Partnerships are kind of the stepping stone in between a sole proprietorship and an LLC, though not often or not always required. Sometimes it goes the other way. Sometimes an LLC is the stepping stone to a partnership. Those two can switch a bit, but they're always typically in succession to a corporation filing once you get big enough to support that. Let's see. Next up would be the LLC, which typically does have more than one person. You can have a sole proprietorship turn into an LLC, but usually by that point, if you don't have a board of people who help support you and can do different things, it's a good idea to get one when you're an LLC. So a limited, which stands for limited liability company or corporation. It is used interchangeably, but I typically use company in place. So as an LLC, you must file separately from the state. The LLC is now considered a separate legal identity from the owners. So the business itself, in the business name, you can own property, have investments, you can have bank accounts, you can sue and be sued, both as yourself and as the company. So that could bite you twice if you're not a very upstanding person, if you're not really sticking to your word and doing business the right way. So it slightly protects the owners from acquiring business debt, because the business itself will own that debt, whereas with a sole proprietorship specifically, the owner will own that debt. So everything, if you do go out of business, all of that's going to be on your shoulders, whereas with the business, as an LLC, if you go out of business or file bankruptcy, you can do that separately from your personal accounts. It will still affect things, but not in the same way. And lastly, we have the corporation, which is usually at that point you have quite a few employees. You may or may not be on the stock market at that point. So there's two main types of corporations. There's the C-corp and the s-corp. The difference between the two is an s-corp is considered small business, typically up to about 10, 20-ish, depending on the wording and where you're at, employees, and a C-corp is, or a regular corporation, is a larger company. And the main difference between the two, the main difference is in the tax details, the wording, and how certain things apply. As a corporation, documents have to be filed with the state and federal government, which recognizes the corporation as a completely legal identity from the owners. Kind of the same thing with an LLC, but with a corporation, it's much more serious. There's more paperwork involved, and at that point, I definitely recommend having a legal team. And then again, with the corporation, similar to an LLC, you can buy property, you can sue and be sued, have investments, real estate, do more charitable things, and you can get into, as a business, being a profit or non-profit more easily. Not easily, but quite a few do end up going that way. And then you can have bank accounts and statements and that kind of thing as a business. Which again will protect you a little bit if the company gets sued or goes under. It protects the owners a little bit more that way. Those are the four big things that I'm going to be talking about in the series on tax deductions and things that you could potentially qualify for. I'm mostly going to focus on the sole proprietorship and the LLC and a little bit into the partnership a little, but I will cover everything just in case. So